what expenses can we deduct in our business, right? Hey, we want to deduct. So the question is what expenses can I deduct in my business, right? And against your revenue. And the book answer is any expense that is ordinary and necessary to the business. Unfortunately, there's just not a list that I can come up with, because some things that are ordinary to one and necessary to another, to one, are not ordinary and necessary to the other. For example, my accounting practice when I was out on my own did not need a chocolate tempering machine. Well, maybe we did. Maybe I would have done better if I would have given chocolate out. But right, I didn't need it as an accounting practice, but a candy manufacturer needs that. So that's ordinary and necessary to the business. We want to be careful that we don't push what would be considered personal expenses through a business. We don't want to commingle, but anything that's ordinary and necessary, honestly, we really can take as a deduction to the business. And that opens up the floodgates. There's really a lot of stuff we can do in there. Okay. Great. So here's our next question. What if you have two businesses as service and retail? Do these financial statements have to be separate? Do they have to be? No. Would I recommend them be separate? Yes. And the reason is because how do you know how profitable, or if your service business is profitable, if we're mixing in the retail, right? If we're mixing these two companies' revenues and expenses all together, we know as a whole between the two whether or not you're profitable, but we don't know for sure if one is profitable and the other one's not, or which one's more profitable, right? It could be that one of those businesses is very profitable and it's basically funding the other business, but we're not sure as to how much. I would absolutely separate those, just as a matter of being able to read the numbers, right? You want to keep those separate. In my opinion, I would do that. Let's see. Can I use my personal income to start my LLC business? Yes, you can. You don't take your W-2 income per se and deposit it directly into, you don't have your direct deposit for your wage into your business account. What you do is it's basically you take your personal money, right, that's come from your income, and you contribute that. If we went back to the balance sheet that I had presented, there was those $48,000 in contributions that came from the business owner's prior income, right? It's something they had and they contributed it into the business. So yes, you can use your personal money maybe as a better way to fund your business. Okay, maybe a better way to put that. What percentage of net income do you recommend setting aside for tax purposes? You know, just as a general, we would say between 20 and 25%. Now, for some of you, that's going to be too much. For some of you, it's not going to be nearly enough. And unfortunately, there's just not a percentage that we can put out there for this. And the reason is because your business income is going to flow into your personal return. Okay, unless you're a C corporation, which pays taxes on its own, then it's 21% plus whatever the state is. But if it flows into your personal return, your business income is going to be taxed at your individual marginal rate. Well, some of you don't have any other income other than business, and so you don't have to. Your marginal rate's going to be lower. Others, you may have significant other income, so your marginal rate could be 24 up to 36, 37%, right? Plus state. So unfortunately, there's just not a percentage we can throw out there for this. A good rule of thumb is right around 25%. For most, that will cover the state and federal income taxes. If your circumstances are that you have a lot of other income on your tax return, we'd probably want to have a phone call with you. Okay. Or it could be different just depending on what your other income is. Let's see. Also, what recommendations do you have for a joint partnership LLC for splitting the income between all company owners and saving for taxes after reviewing financial statements? Okay. What you do here, the income is going to be split based on whatever you guys decide between yourselves, each person's ownership percentage is, right? So if there's 4 of you and you say we're all equal, that's 25% apiece. That means each one of you is going to be allocated 25% of the net income. Well, as long as you're operating your business well, you're probably going to have that much cash on hand to actually make a distribution. You distribute all of your earnings, okay, or at least a significant portion of them, okay? You're going to be taxed on the income of the business, in this case, the multi-member LLC treated as a partnership, whether you take the money out or not, okay? So I'd recommend a distribution. Now, I have had partnerships in the past that I've done work for where they said, we don't want to make distributions. And the reason we don't is we want the money in the business for future operations, because maybe there's something big coming down the line that they need the cash for. Okay, that's fair. So what they've done is they've gotten together as a group and said, all right, we're going to make what is called a tax distribution, or a distribution for tax purposes. So they get together and they say, okay, each one of us is going to be allocated $50,000 out of this business. But we've got to have cash to pay the taxes on, because we're all going to get taxed on that 50,000. But if we don't make a distribution, I got to come up with that cash on my own. So what they'll do oftentimes is they'll put a percentage out there and say, we're going to distribute 35% of earnings, just enough, just to cover taxes that the individuals might have to pay on their individual allocation of that income. Okay, that's something that I've done in the past. Otherwise, as long as you're distributing out the earnings, they're going to have enough money to pay to cover their own taxes, right? It says, what with projections and balance sheets, what software will be good to keep track? Well, you know what? For projections, I use a spreadsheet. Unfortunately, I was going to kind of show that. All I do is I say, okay, if my revenues grow by 27%, so I grow my revenues by 27%, leave some of my expenses the same that I know are going to be pretty much the same, right? Maybe my rent doesn't change. Office supplies probably not going to change very much. Well, if my revenues go up by 27%, my cost of goods probably are going to go up about that. Make an estimate there, and then make a, my shipping or my postage is going to go up by about that much, right? So I increase those, leave everything else about the same, and that's going to give me a projection. Just a Excel or Google Sheets or something like that, that's great for doing projections, not great for doing your day-to-day accounting, right? That's what we do. We at Mazuma, right? We do the accounting for small businesses. That's what we're here for. There's other softwares out there that you can use for day-to-day accounting. Would not recommend Excel for those, okay, for day-to-day. But for projections, you can use an Excel spreadsheet. Just download everything in and do what you want with it. Some accounting softwares will have a projection, and you can fiddle around with that in there with those as well. What software do you use to track your financial statements for small business? I think that's what it says to you, but I think it's do you. Currently, we use what's called ZipBooks, okay? But we are moving over to our own proprietary accounting software. We're going to call it ZoomBooks, Mazuma Books, ZoomBooks, okay? That's what we will be using going forward to track all of our businesses that we do the accounting for, okay? Let's see, what if you started your business with your own income, but it was not reflected under contributions from owner? Should this be revised? I would think so, yes, because my question would be, how then was it reflected? Hopefully not as revenues, because it's not revenues. In that case, absolutely you want to do a revision of your taxes if you've already done them. I would be curious as to how the contributions were classified. It may not necessarily need a big revision. It may not change the income statement. But if it was done incorrectly in some ways, yeah, absolutely, I would do a revision. It could make a big difference. Let's see, is there a software preference, Mizuma? um, yeah, of course I'm going to recommend us, right? That's what we do. I'm not going to undercut myself necessarily. So that's my first recommendation. Mizuma, that's my first software preference. We're not a software, we're a service, right? But we do use software. There's many of them out there. Everybody's heard of QuickBooks. I used QuickBooks as a sole proprietor on my own for 16 years. Yeah, it can be kind of expensive depending on how you're doing it. I would not use something like Quicken to do a business. I would not use some, I know there's one that Dave Ramsey has, but it's for personal finances. If it's geared towards personal finances, I would not use it for business. Okay. So there, maybe that's a cautionary one out there. And then there's some other big ones out there that are just fine. Most of you aren't going to need Peachtree or any of these really big, complex, super expensive ones. But my number one recommendation, Mizuma. Absolutely. Right? Let us take that from you. Don't spend hours inputting stuff and then wondering if it's categorized correctly. That's what we do. So that's my recommendation, but certainly there's some other things out there. All right. That looks like we've come to the end as far as our questions are concerned. Oh, got one. Oh, man, you guys knew I was about to jump off. Threw a couple more in there. That's great. So I'm the only person in my LLC business. Where can I start so I can stay informed with my taxes? You probably don't want to do all the research your own. I be careful of that. Be careful of Googling things and jumping on and watching videos. Some of those are very helpful. Others, they're misleading. Okay. Hire a service, hire an accountant. That's what we do. We take that away from you at a very reasonable cost. And we do the bookkeeping for you. We also do tax advice. Find somebody who's knowledgeable. That's what we do. We are Mizuma. We do income taxes and business accounting. Okay. Otherwise, you could read all of the internal revenue code. No, don't go do that. That would be crazy. Okay. Find a good consultant, part of your team. Make them part of your team. They don't have to have ownership, right? That's not what we ask for. Make them part of your team. Somebody that you trust that you can go to and consult, right? We've seen a lot of things. There's still things that pop up that surprise me, but we've seen a lot, okay? How much do you charge to manage the accounting for small businesses? We're okay to talk about that right here. Okay, we actually have several different plans. We have a basic plan. It's $90 a month. We do your accounting and the business income tax return. If it's a Schedule C, which would be like a single member LLC or a sole proprietor, that's actually your individual return. And so we would do that for you. If it's a partnership or an S Corp or a C Corp, that includes the business return as well as the accounting. Now, there's limitations. You can't have foreign assets, loans. That's for very simple books. Once you bump up to a little bit more complicated accounting, we have what's called the Plus program. Okay. We do all of the accounting. We do the business tax return and one individual tax return attached to the business. It's $180 a month. On that program, that's a little bit more of a full service program. You have a dedicated bookkeeper, somebody that is assigned to your business books, someone that if you've got accounting questions to, you can contact directly, whether it's email or you can get on their calendar. You have a dedicated tax professional, someone like me, where you can either email in or you can get on my calendar and we can have a discussion. You can ask questions, give you answers. We can do projections. And so those are the two programs. And if you've got, we don't do foreign taxes. So if you got foreign assets or foreign income, we can still do your accounting. I think it's $135 a month under that situation, but it would not include any income tax preparation. Okay. There's some things that we just don't do. I think that's a pretty good overview of what we charge. We've got several different programs you can choose from, as long as you qualify for those, right? Next one, since just became multi-member LLC, what about tax distributions? Oh, it's really not, it's a distribution in order so that the members of the multi-member LLC can cover the taxes that they have to pay individually on their allocation of income. It's kind of a long answer, isn't it? You're not actually making a payment to the IRS or to the state taxing authority. You're not doing any of those. What you're doing is you're saying, hey, we've had income. That income is going to be allocated to the owners. They're going to individually pay taxes on those. So we're going to make a distribution of enough to cover the taxes that the owners are going to owe. Okay. We call it a tax distribution. That's what I've had members call it in the past. And usually it's a percentage of the net income that's going to be allocated. And the only reason people do that is they want to hold on to the income as much inside the business. They don't want to distribute it, because they know that there may be things coming up that they're going to use the money for. Most of our businesses don't need to do that because they're already up and running. There's enough money coming in to fund future operations. So they're able to just pretty much distribute all the earnings. And we don't necessarily need to call that one a tax distribution. I hope that helped clarify that issue. All right. If a business is started last quarter of the year, can you file for taxes assuming the fiscal year is a counting year of December 31st, or wait to split it over and file for 14 months? No, it's what you do is you file what's called a short year. Okay. So if you started on, let's say, October 15th, right? 2.5 months, you got November, December, and half of October. You file what's called a short year tax return, October 15th through December 31st, okay, for its income and revenues. And then you do the full year after that, right? The full 12 months for the calendar year, okay? January 1st through December 31st. And so for most businesses, right, they don't start on January 1. That's a holiday. Why would you start a business then? Okay. So most businesses, their first year, they're going to have what's called a short year tax return. And you would put that first couple months or so on the first year's tax return, and then you'd go full years after that. Okay. Great question. All right. That does look like it's the end of the questions for today. Thank you for participating today and putting up with me as we've gone through this little webinar. Hopefully it's been informative and helpful. And we're going to go ahead and sign off. You guys have a great rest of your day. And again, thank you for being here. Goodbye.